I covered gold back in the day. It was my beat, like in 08, 09, and 2010. So this is a really fun time to talk about gold. What do you make of the gold market? You got rates going higher, real rates going higher, dollar going higher. What what's the conversation you guys are having around gold right now?
Well, gold looks really attractive in pretty well every currency other than the U.S. dollar. There's so much strength in the U.S. dollar right now that and of course that's the reference measure that we use to value gold right now is the U.S. dollar. But it just sort of reinforces that the commodity itself is actually gold as the commodity itself is doing relatively well on a worldwide basis. Just the U.S. dollar is so strong compared to everything else right now, and so I think we're suffering a little bit behind that. But overall, we're still in pretty good shape.
If you had told me like 10 years ago that inflation in the UK, for example, would be at 10%, we'd be at 8% here in the US, I would have been like, we are definitely at 2000. Are you surprised that we didn't hit that?
Well, you know, and showing, I can remember, similar periods back in the 70s and 80s. And obviously, you got a few generations or a few decades of history over yourself, and I can remember it being like this. Gold is still there and I do really think that we're getting well positioned to become an alternative, right? As we see U.S. dollar strength, I just don't think it's long-term sustainable. There's going to have to be a chink in the armor at some point within the U.S. dollar, and when I look around the world, I'm actually pretty excited about where gold can position itself in a situation like that. And so, how much longer can we see this continued strength in the U.S. dollar relative to everything else? I think we all want a little bit of gold in our portfolio when that happens.
Well, that's a really good question. First of all, call me young anytime. I'll take it. But in terms of the diversification for our portfolios, right? How do you feel like it's going to be its own asset class in everyone's portfolio? And like, what do you think that percentage will be? And like, how does that adoption look like?
Well, typically what we've seen is there's a lot of recommendations out there for about 5 to 10% exposure within personal portfolios
Mhm.
should have exposure to gold, and it is what it stands for and what it's always stood for is a measure of value and a store of value, a good solid one that withstands all sorts of different political influences, all sorts of war machinations, all the challenges and the economic challenges that we have around the world. Gold has always been able to survive through that. It's interesting. I just had a friend that was comparing the price of a beer at Oktoberfest in Munich in gold terms, and it's held itself constantly. You're not paying more, whereas in euros, it's 19% higher than the last time they had an Oktoberfest there. And so, if you'd have paid them for it with gold, it'd be the same price as it was 10 years ago.
Do you feel like gold in any way is competing with Bitcoin?
I think that argument has really fallen off over the last while. The challenge with Bitcoin, and I always love it when they represent Bitcoin with gold images, whereas really it's just a vacuum. There's nothing real backing Bitcoin. So the only thing with Bitcoin you have is a hope that someone will pay more for it than what you paid for it. And there's nothing of substance behind it that you can hold, that you can feel, that you can use. And gold itself, I do think it has so much more substance behind it.
I got, I gotta
Sorry, go
say,
ahead.
Randy, though, well, if I talk to a gold bear, they're gonna say exactly the same thing about gold. It has no uses except for what someone's willing to pay for it.
Well, the store of value concept, and I've always said you don't really appreciate it until you have respect for history. And unfortunately, typically humans, we only start respecting history when we get to my age. When you sit back and look at history, you'll understand the value of having a constant store of value, an immutable store of value that doesn't get weaponized, that doesn't get printed, doesn't get isn't controlled by outside agencies, and that's really what gold supplies.
So let's move on from gold for a second and talk about other metals. And I'm curious, what metal, and this can be, silver, it can be lithium or cobalt. What metal would you say that you guys are most bullish on?
I love silver. Silver, I hate to say it, as the chair of the World Gold Council, I don't know if I'm allowed to say that,
Shh, you won't
but
tell them.
silver, yeah. Silver has a couple of attributes to it that I think make it very, very in high demand in today's world. It conducts electricity better than any other metal. It's more efficient. That means that your batteries will last longer if you have silver involved. And it doesn't take a lot of silver. We're talking only microbial amounts of silver sort of mixed in with metal to enhance that conductivity and reduce that resistivity, which means that your batteries in your mobile phones will last longer. Your batteries in your cars will last longer. It means that when you're moving energy around, you have either greater processing power or longer battery life, both of which are objectives of society. It also has incredible antibacterial applications, and in terms of today's world, especially coming off this pandemic and the risks that we've seen around that, how important antibacterial, good strong antibacterial applications are. So water purification systems and such. So silver just continues to shine, I guess, in the demands of today's world. And yet it doesn't seem to, it hasn't seemed to move. Its value relative to gold has actually stayed very low, almost record lows. And so we just think that as that industrial demand, as that demand for us to continue improving society comes forward, silver has to play a role in that.
What about other metals? And I guess I'm really hinting towards the energy transition and the shift really to green. And clearly, as you were mentioning, silver also plays a role in that. But when you think about those metals, you're thinking lithium, cobalt, copper. What about those metals? Is there a role, and I'm talking about Wheaton in particular, to really capitalize on that when you're looking at streaming deals?
Most definitely. Copper projects are very, very capital intensive. Nickel projects are very, very capital intensive. Lead zinc projects, very, very capital intensive. They need a lot of capital to get built up and running. And our business is supplying capital. Each one of those metals, all copper mines, all nickel mines, all lead zinc mines, they all have byproduct precious metals. And so we supply the capital to help bring more copper, lead, zinc, and nickel to the world. And we supply that by purchasing the non-core precious metals off these assets. And so more than half of our production comes from base metal mines that are supplying those essential metals that the world needs to electrify itself. And that's just going to continue growing as that increased demand for those metals around the world. There's going to be an increased need for capital to build those mines. And so we're in great shape to sort of help the world electrify itself.
This would be a weird question, but are there any streaming opportunities where like cobalt or nickel can be the byproduct?
Well, we actually do have a cobalt stream in our company already, the Voisey's Bay operation, which is owned by Vale in Newfoundland here in Canada. We've probably about 4% of our revenue, or 4%, about 2% of our revenue currently, but it will be 4% of our revenue as the mine ramps up. So we do already have a little bit of cobalt coming in, and cobalt typically does come as a byproduct to nickel mining operations. And so there are opportunities like that. But our company, what we promise to our shareholders is, as the name implies, Wheaton Precious Metals, we do focus on the precious metal side. Now, if cobalt prices keep on climbing, it may be classed as a precious metal pretty soon. So the increase in demand for batteries, Cobalt stops batteries from burning up. It's a pretty important aspect.
Wait, I didn't know that there was like a classification. How do I get a classification as a precious metal?
I guess the higher it becomes precious.
Like, just a high price and therefore I'm precious. Okay, yeah, fair enough.
Exactly.
Talk to me about then the palladium and the platinum part of it, because they can also be used in the energy transition, yet they're classified as precious metals. What kind of opportunity in terms of streams do you see for those guys?
Yeah, the challenge that we have, we do have some platinum and some palladium. We get palladium from the Stillwater mine in Montana, and we've just signed a deal with Generation Mining on the Marathon project to get some platinum into our portfolio. Most of the consumption is on the catalyst side, and so increasing environmental standards in terms of trying to pollute less on internal combustion engines will drive increased demand on platinum and palladium. The challenge that we see in the platinum and palladium market is most of it comes from pretty risky jurisdictions. The biggest producer, Russia. Guess what? Unfortunately, that's not going to be available for a while. And then even after that, you go down to South Africa, where there's challenges. It's still a reasonable country in terms of investing into, but there are challenges in South Africa. And so one of the challenges we do see is finding platinum and palladium in politically stable jurisdictions, and which makes Stillwater in Montana and the Marathon project so attractive to us.
It does, and you also like those low cost, long life assets. How small is your pool shrinking for available assets? You want to be in a safe jurisdiction, long life, low cost. How many options do you have?
Well, that's a challenge in today's society, is the demands of the society as a whole in terms of being able to permit projects and build new projects. And it is getting tougher and tougher to not only find deposits, but also to permit them, to move them through and get acceptance from the local communities, the local neighbors in the area. And so it makes it even more important that the existing operations put a real, even stronger efforts into maintaining strong social license. That's an incredibly important aspect of being successful in the business. And so, as I'd say, we put at Wheaton, we do a lot of co-funding with our partners to try and make sure that they maintain good, strong social license, so we can maximize the benefit to society from the existing operations. Hopefully, that lessens the need for some of the new ones. But there is a point that some of us have to accept that we're going to have some of these assets in our backyard. And what I find challenging in society is when people want the modern technology, they want the mobile phones, they want the batteries, they want to electrify, but don't build that copper mine in our area. We don't want to have to supply those resources. Let someone else do that. And what's more challenging, what's more frustrating about that is that it actually winds up shifting some of that production to lesser regulated areas, to areas that don't have the same environmental standards, the same operating standards, and that's not a good thing for anyone. What countries that are resource rich should do is accept the fact that they have an opportunity to deliver the best product, the best commodity, the highest standards, both environmentally and socially, and deliver that to society as a whole and embrace that opportunity. And so, we continue pushing our way towards that.
So in the meantime, does that mean that you have to take on a little bit more risk in order to grow your portfolio, or does it mean more consolidation, or are you just happy where you are?
Oh, we're not happy where we are. Definitely. I mean, this is an industry. Unfortunately, the resource industry, they are limited, and so we always have to at least replace what we're processing, what we're producing every year. I think it's just a matter of making sure that we do everything we can to do it better than we did last year and the year before that. And the year before that, it's always a matter of continuous improvement, trying to make sure that we deliver good, sustainable benefits to the to all the stakeholders. It's not just about us and our shareholders. It's about our partners that operate the mines, but it's also about the communities and the governments that receive taxation and all the other benefits, all the other sustainable benefits that bring in. And one of the huge opportunities in the mining space is the fact that most of our mines are located in rural locations. And so the opportunity to elevate the living standards in those rural locations through a well-run, responsibly run mining operation, it's incredible in terms of what impacts you can have in terms of health and education and just living standards as a whole. It's one of the highest paid, if not the highest paid industries in the world. And everywhere you go, you just elevate those standards. And so it's a great opportunity that we have.
Yeah, but that was my way of asking you about M&A in the streaming space. What do you think?
Well, we see so many opportunities right now. I will say that in general, the mining industry, it's lost some risk investors. The index funds tend to stay away from the riskier investments, and so the single asset project developers, the smaller mining companies, they're having a challenge in terms of getting decent share evaluations, which makes it tougher for them to finance their growth, and that just creates so many opportunities for us right now that our growth is going to come from continuing to add assets into our portfolio. We do constantly look at the M&A side, and definitely it is an opportunity set that we're going to monitor, and if the opportunity presents itself, but we see better value from funding new projects versus going out and acquiring portfolios that have already been bundled up.
Fair enough. And just on that, I'm just really curious. The new streams that you're looking at, are they in developing assets, early deposits, or a mine that's already operating? I'm just trying to get a sense of like where the action is.
In today's world, anyone that's got operations right now is actually doing relatively well. Commodity prices are doing pretty good, especially if you're not in the US and your costs are on some of those other fiat currencies that have been devalued so much relative to the US dollar, and you're selling your product in US dollars. And so there's decent profitability in the mining industry right now. And what that means for a company like us that supplies capital to the mining industry is that If they don't need outside capital, they don't need us really. And so where our opportunity set is the single asset development companies, and there is a lot of good assets out there that are moving forward where they don't have operating cash flow internally, and so their sources of capital, debt, equity, or a stream. And right now, a stream is by far the most attractive of all of that. And as we see debt getting more and more expensive with higher rates, streaming is even going to become even more attractive. And so we are as busy as we've ever been in terms of looking at opportunities.